Hi traders, my evening video here. I'm going to use the futures contracts to. I like to prefer charting with the futures contracts on the charts here and stuff. Where we're at and where we may be headed, real quick here, guys. So I got a few different things on here as far as indicators. Um, this is a critical divining area right down here. Earlier on this week that we came up into, and now we're moving up. This is a trading zone from here, and it's a trading. We're going to find some resistance up in this area right here. This high. See the illiquid zone right there? I can actually put a resistance area right there. Okay, guys. I didn't have that on my chart, and so that's the top of that range right there, acting as resistance. Okay, and I can probably bring that. See how it's acted as resistance before? Anywhere through here, it's acting as resistance. Okay, and let me put that pink. Okay, guys. So here's what's going on here on ESs. So we broke out of a trading support this morning, and we went up into the next resistance area. This is technically a head and shoulders. This is the head. This is the shoulder. We're into what could potentially be the top of the right shoulder. Okay, that's technically from a candlestick setup here. That's what we're looking at right here, right now. We are beyond the expected market maker move for the week. So right here, right now, the market makers are increasingly becoming underwater because they did not predict a move this high this week. Okay, guys. The ESs are typically, if you're in a bearish market here, the ESs would come up for a 50% retrace typically and continue to move down. We are beyond that 50% retrace of this move in this most recent sell-off. So we are beyond that. So this is bodes a little bit more bullish than bearish at the current moment. Okay, because the ESs are actually showing relative strength to even the Nasdaq and the Russell. So just be very, or the Nasdaq in general. Okay, so we're showing a little bit relative strength on the Nasdaq. We are above our weekly 5 SMA and EMA. So the brown area right there, that represents the 5 SMA and EMA on the weekly. The purple here represents a 10 SMA and EMA. So these are zones, moving average zones. We're above both of those zones on the weekly time frame. That bodes more bullish than bearish. So be very mindful of that as well. Having both of these right here, this could be a magnet into the end of the week. So that we definitely got to think about that, you know. So a back test of the 5 SMA or into this area right down here is very likely. That would put us back into this range high, and this actually came into support. That would be 67.50. So coming into tomorrow, we would have to think coming back down to 67.50 is ideally a buyable dip if it becomes new support. That would be right into the 5 SMAs. You know, that'd be a very bullish pattern if that's all it would come down to 67.50. Ideally, if we hold above 6,700, that's still a very bullish pattern because you're holding above the weekly 10 SMA. So, you know, ideally, that's what I would be looking for, a back test of 6,700 in tomorrow's session. And this is also into this range support. Okay, so, you know, the 6,700, there's a lot of reasons to think they're going to come in and support 6,700. A lot less reason to think they'll support 6,750. But, you know, anything can happen. Okay. Both of those seem to be logical support zones if we were to come down into the downside. Now, if we were to continue higher, you want to get above this illiquidity zone before you actually want to and let us see that become new, that they're going to support that. Okay, and that would put us at 68.10. 68.10. We want to be accepting prices and holding above 68.10 for a new long entry point. Okay, and we do have a major fair value gap up here that has that should be repaired. It doesn't have to be, but should be. But we have also another fair value gap down here that should be repaired as well. Uh, you know, like I said, either way, both of these need to be repaired at some point in time in the future. So 67, 68, 40 area, and then the 68, 60 area. Okay, so those are the two areas here on the ESs. We'll go over to NQs. NQs, guys. I'm going to zoom in here. We're on the 4 hour. Okay. Okay, guys. Some things we got going on here real quick. So we see that this acted as resistance here, resistance here, resistance here. Uh, this was a gap up right here. Actually, I can add a gap right there. That's another liquidity trap right there. So we had another gap. So we got a lot of illiquidity right above here. So this is actually gives, while it's not ideal, this gives us the idea that this was an island top. You see these gaps right here, this gap here, this gap here. Right here, right now, the NQs has a lot of the ingredients of it's not a true island top, but it's got a lot of the ingredients of an island top. So be very mindful of that. Uh, so we definitely want to be mindful of that as we go forward here. Okay, guys. Other things we got going on here. We've came up showing relative weakness on the Nasdaq, 50% retracement. If this this is the area, if you think there's meaningful rotation coming out of the NASDAQ, right here, right now, should reject. Okay, so we're going into tomorrow. The NASDAQ should absolutely reject right here if there is meaningful rotation out of the NASDAQ. So be very mindful of that. Another thing here, we got an inverted head and shoulders. Okay, we have already on Wednesday hit the top of that neckline. Okay, uh, so be very mindful of that. We've already hit it once. Okay, this is the area you would like to see reject from here for as a bear. So be very mindful of that. We are still within our weekly 5 MAs. Okay, which is still very much bullish. Okay, we are still within inside of that range. Okay, we are still slightly above our weekly 10 MAs. Okay, so we're a little bit more bullish, on versus the MAs there. We are above our expected move for the week. Okay, so the market makers are a little bit underwater here, so be very mindful of that. Okay, technically this is new support until proven otherwise. So if we come in tomorrow, and as long as we're holding 64,870, 64,870, as long as we're holding above that, this is still a very much bullish pattern until proven otherwise. So, but see how this chopped around really bad before? Okay, we looked above before and it failed. Okay, we have to be very mindful. It looks like it could be a trap, and it may be a trap right here at that 50% retracement. Looking above, going into the overnight session could very well be a trap into all these MAs. This could all be acting as resistance, uh, going into the overnight. So be very mindful of that. This here looks a lot more bearish versus the ESs. So be very mindful of that. We do have a fair value gap that we left behind last week down below us here that should be repaired. And we have 2 fair value gaps above us that have not been repaired yet that need repaired as well. So be very mindful of that. Okay. This here is a much weaker pattern, especially with what kind of looks like an island top and a head and shoulders. So this is a much weaker pattern than what we have on the ESs. And the Russell. Finish it all out here. Zoom in here, guys. Russell was showing a lot of relative strength today. Okay, guys. So what we got going on here in this consolidation? Okay, this is technically resistance here on the Russell. We're into it right now. So from this fair value gap rejection, uh, okay, down to the 10 MA. Okay, down to our 10 MA, we did a 50%, basically a 50% retracement of that down to the 10 MA. Okay, down to the 20 MA, we're above the 50%, above the 60%. So, I don't see the 5 MA on this one. I thought for sure I drew it out. I'm sorry. Oh, yeah. The 5 MA and the 10 MA. The good thing about the 5 MA, the exponential moving average is starting to cross over the simple moving average. uh, MA. So there's just a line there. The 5 MAs right here. Okay, guys. So we're doing a crossover of the exponential 5 versus the simple moving average 5. Okay, so that is a bullish cross um, of those MAs. This is actually a little bit quite bullish here on the Russell, showing a little bit more relative bullishness versus the weekly 5 SMAs. Okay, so be very mindful of that. A lot more relative. That's a nice little signal to be seeing on the Russell. Okay, I forgot to put no, yeah, okay, and we are well above the market maker expect to move. So, we're actually showing relative strength relative to the market maker expected move here. So be mindful of that too as well. So we're in a really strong um, uh, gamma squeeze. Currently in a nice little gamma squeeze here going on here on the Russell. Now, the fair value gaps to the downside have all been repaired here in the short term. All these short-term fair value gaps have been repaired. We've only got one fair value gap above us that has not. And typically, Russell fills the gaps. Okay. Historically, Russell does fill the gaps. So this actually should say in the back of our minds, we should be probably a lot more bullish than bearish, given where we're at in the markets. So if you just use the Russell as a primary gauge, just the fact that we go into the Christmas holiday season, the Russell does tend to outperform during the holiday season. So be very mindful of that as well. That there's a really good chance we're going to fill this fair value gap here on the Russell here in the coming days or weeks. Okay. So thanks a lot for listening. Please retweet me on X and uh, like my video if you get a chance, and tell your friends. Really appreciate it. Thanks a lot.